We need to talk. Girl, you've been sitting on the sidelines waiting for the right time to buy for way too long. And that window of opportunity might be closing faster than you think. So in today's video, I'm breaking down the New York City housing market borough by borough, Manhattan, Brooklyn, Queens, and the Bronx. Sorry, Staten Island. With actual numbers, not opinions. We're talking inventory, days on market, median asking prices, what's moving and what's sitting. And then you need to stick around to the end of this video because I'm going to tell you what all of this actually means for you as a first-time home buyer, as an investor that's looking to house hack and maybe a 2 to 4 family, and whether or not if you're relocating to New York and trying to figure out where you want to end up. So stay with me because by the end of this video, you're going to know more about the New York City market than people who have lived here for years. Let's get right into it. So let's start at the citywide as a whole. So the big picture is going to be that zoom out 30,000 foot view. We want to see what's going on in the market in New York City as a whole so that you can really put in some context regarding what's happening in the boroughs. So let's take a look a little bit deeper at Street Easy's data for March 2026. So currently there's 15,615 homes for sale across New York City. That's up 5.1% from a year ago. And more inventory sounds like great news for buyers, right? But here's the nuance. Inventory is not rising equally across the boroughs. Queens is up 18.2% in supply. Brooklyn is up 8.3%. Manhattan inventory is actually down 0.5% year over year. So the citywide average is actually being pulled up by Queens and Manhattan is just getting a little bit tighter. Citywide, median asking price is just under $1 million, $999,000, which is down 4.9% from a year ago. So on paper, sounds like a buyer market. However, a falling median asking price in New York doesn't always mean homes are selling for less. It can just mean that lower priced homes have been on the market, which pulls the number down. And a lot of co-ops and condos, of course, fall into that category. What it also tells me is that the real demand is this. 18.6% of homes sold above asking price in March this year, up from 16.5% last year. So sellers are still winning bidding wars and making it happen in the right neighborhoods. Homes citywide are still moving in 61 days from the list contract, which is basically the same exact number as a year ago. So here's the honest take. While the rest of the country is slightly leaning towards a buyer's market, New York is not a buyer's market across the entire city. New York has a bifurcated market right now. What does that mean? Some boroughs are soft. Some are heating up and getting hot. But knowing the difference is definitely where you want to make sure you're paying attention so that if you're coming here, you know where to buy. Let's get into it borough by borough. Starting with what everyone thinks of as New York City as a whole, the island of Manhattan. And now might be a good time to let you know it's your girl Lizzztings. I help people moving to the city to relocate, buy their first home, and figure out if investing is right for them every day. And I'd love to be that person for you. So if you're interested, hit me up. You can find me in the DMs. I make a comment, ask a question, set up a call. I'd love to be that person for you. I'm on an amazing team that helps investors like you every day. Let's get back into it with Manhattan. So Manhattan market right now looks like it's a little flat. And flat in most markets means like, okay, it's getting a little soft, but not necessarily here in Manhattan. And let's dive into why. So a flat market in Manhattan is worth paying attention to because the median asking price right now is just under 1.4 million, which is down just 2.1% from last year. That's a modest correction. It's not a collapse. But what's happening underneath that is what's telling us more of a positive story. So days on market has dropped 10 days by year over year, which is down to 64. That's telling me that sellers are pricing more realistically than they were last year. And when they price right, buyers are responding. Contracts signed in Manhattan are up from 1.2% year over year, which isn't really a big change, but that movement is in the right direction. And if you watched your girl listings before, you probably have already seen my video on co-ops versus condos, but if you haven't, I highly recommend taking a look at that. It gets into what is the difference between the two and how you can tell which one is right for you. But right now, I always advise people against buying a condo if you're looking for an investment property. But if you're looking for your own primary home for even 5 years, it would be worth it to look at co-ops. And I say this because right now, co-ops are really hot. as far as what's selling in Manhattan. And if you're adamant about living in Manhattan, which I was when I first moved back, so I totally understand that, then you might want to look at a co-op and see if it's right for you. Even as a short-term investment, it might be worth it rather than paying someone else's mortgage. I always see that as the worst alternative. I know a ton of people in Manhattan still do that, but if you're planning on staying here long-term and you love the city like me, then it might be worth taking a look at what we have for co-ops and investing in yourself. Let's look at Brooklyn. Brooklyn, everyone's favorite borough these days, tells a more nuanced story. Inventory is up 8.3 year over year. Buyers have more options than they did last spring. And median asking prices is down 5.4% to 1.27. On paper, that makes Brooklyn the most buyer-friendly borough in the city right now in terms of price movement. Days on market rose 7 days, which went to 55 days total. And that means that homes are sitting a little bit longer before going into contract. But what does that mean for you? It means that if you're moving to negotiate more in Brooklyn, you have more room to do so than you did a year ago. Sellers are competing for your attention, not the other way around. But, and I want to be clear on this, sitting longer does not mean nobody wants it. It means the buyers are being more selective. The right home, the right block, in Park Slope, Carroll Gardens, Cobble Hill, or Crown Heights, still moving fast. The homes that are sitting are either overpriced for what they offer, and they have condition issues that sellers aren't ready to address, or the seller is unrealistic with what's going on there. The market is rewarding well-priced, well-maintained homes and penalizing everyone else. I want to get into a little side story on this. I have a client who's been looking since last summer, but they have no rush. It's an investor who's looking to house hack. If you're not familiar with house hacking, I have another video that's all about investing. But what it means is when you are looking to move into the property and rent out the rest of it as a supplement to your mortgage. So you're going to live there, but you're also going to rent out the rest of it could be bedrooms, it could be the entire extra unit, and that can go for any size property. So you could even do that in a smaller condo if you wanted to. House hacking, look it up. Very important. Let me get back to what I was saying with the story. So one of my clients, he's been looking since last summer. We found a property that's on the border of Crown Heights and Borough Hill, and he really likes it. And he's kind of like, well, now it's off the market and the seller didn't sell. The problem there is that they have a lot of extra tenants that we're not really sure what's going on as far as paying. They're not really being completely full disclosure with us, so to say. So it's hard to tell if they're willing to actually work with us on the price. We offered pretty close to asking, but we wanted it to be delivered vacant, and they weren't willing to budge on that. And now the property has been sitting for almost a year and they haven't sold. So it's like, what are the real intentions here? And the buyer I'm working with really wants that property. It's this closest to what he's been looking for as far as numbers go and as far as location goes that we found in the past year. So we're still working on it, but all that to say, if you are interested in buying here, you have to be open-minded, especially as an investor, to be patient, flexible, and think outside the box. So we're getting creative with terms. We're getting planning on offering just straight to the seller once the listing expiration date comes. So there's alternatives to making it work, but you have to be patient and you have to be open-minded. Very important here in New York. Queens is the borough that is getting the most attention these days, and rightfully so. It's her moment, Queen. So let's take a look at the data. Prices are up 4.5% year over year. It's the only borough in the city with a positive price trend. And yet, the inventory is also up 18.2%. Both supply and demand are rising at the same time. That tells me that Queens has hit a tipping point. Those buyers who couldn't afford Brooklyn are landing in Queens and finding real value, especially in neighborhoods like Forest Hills, Astoria, Jackson Heights, and Sunnyside. Days on market rose 8 days to 65 days in total, which on the surface sounds like a slowing demand, but I want to give that number some context. Queens has more diverse housing stock than any other borough. It has co-ops, condos, attached homes, semi-detached homes, single families, 2 families, 3 families. Buyers in Queens are doing more research, comparing more options, and being intentional. So that extended search time reflects that variety, not lack of interest. Back to story time. So we have a house closing in Forest Hills actually next week, right before we get into the next part of the year in Q3. So Forest Hills is popping, but there's properties there that are considered single family that you can see a lot of value if you're planning on house hacking. So a lot of our investors are looking for that as an option because it's a lower price to entry, but you're getting a unit that maybe has a basement that has outside access entry points. So that's exactly what my buyers are doing in Forest Hills right now. They are purchasing a property that they plan on renting out the basement. They are having their first child this summer, so they're going to be looking to stay in that house for a couple of years. And this is what I recommend. People think of like the old school mentality, this is my first home, it's my forever home. Not really anymore the best way to think of it in real estate. You want to think, well, this is my first property and I plan on staying in it for a temporary amount of time and then buying a next one once we feel like we've built that property up where it's sustaining itself with the rental income. The Bronx might be the best kept secret in this city as far as what you can get if you are investing here. Let's take a look at the data. So here we're looking at regional MLS data, which is going to show us some better comparisons as far as what we have in the Bronx. So we didn't have as much on the market from Street Easy, so that's why we looked at MLS for this borough. Single family median prices in the Bronx rose this year to $600,000, which is up about 2.6% year over year. And here's the thing. Sales volume dropped, months of supply climbed towards 7 to 8 months. So when you have rising prices but failing sales and rising supply, it typically means that sellers are holding firm on their price expectations even as the buyer demand cools. So the Bronx right now is the closest thing to that nationwide market that we're seeing where it's the buyer's market. That's what we're going to be looking at as far as like all the boroughs. The only one that has a true buyer's market is the Bronx. It's a compelling setup for a patient buyer and a smart investor. You have room to negotiate. There's going to be less competition on the table. And the Bronx has pockets like Riverdale, Mott Haven, City Island that are genuinely undervalued relative to what you would pay comparable for square footage anywhere else in the city. Mott Haven in particular is in an early appreciation cycle. So we have new construction over there, waterfront development along the Harlem River, and strong rental demand from people that are priced out of Upper Manhattan. So if you are able to look past that zip code bias, and let me be honest, a lot of people are not able to do that, and they're missing out on opportunities that will not be here in 3 years. So just like we were talking about those people in Park Slope who bought in 2015, that same thing is going to happen along the river in the Bronx, and people are going to be saying that whole, oh, I wish I got off the sidelines then. Don't let that be you. Okay, so I know what you're thinking. What does this mean for me, Lizzztings? Because you're like, yeah, that's nice. I'm glad I know what's going on in the market halfway through the year 2026, but I'm looking to buy something this year. So what does it mean for me? So first I'm going to talk about renters that maybe already live here and are planning on buying, getting off that sideline. What are you waiting for? I mean, honestly, how long have you lived in New York and you're not leaving? And you're like, I know it's time. For real, what are we waiting for? The interest rates are not coming down. The prices are only appreciating, and the areas that they're actually staying still or going down those price points, it's because that property was not priced accordingly to begin with. So don't keep that data as like, maybe that's the market as a whole. The majority of the time, the prices in New York are appreciating. So you want to make sure that you're not one of those people who I have conversations like this almost every day. Oh, I saw these properties in 2021 and I wish I bought then. Yeah. And what do you think is going to happen in 2031? You're going to be having the same conversation we're having right now. So if that's you and I'm speaking your language, I'm serious. Like, I was that girl. I didn't realize how much money I was wasting throwing out the window to my landlords when I lived in other places. And now that I'm putting that money back in my pocket, it feels so freeing. It's like, okay, yeah, maybe it's expensive to be living in Manhattan. However, that money's going back in my pocket. And my property already appreciated by almost 100K since the one I bought it in 2024. It's a win-win. So what are you waiting for? If you're worrying with that fear, I get that. Because I also was there, and it's like a fear of commitment or making that wrong decision. That's okay. It's also that whole idea of with great risk comes great reward. So you have to take that step. And that's why I always say, you want it, you got it. Don't talk about it, be about it. It might not be the perfect investment, but how do we learn from our mistakes and make sure that we are growing and learning in this world? You have to be able to put yourself out there and try something new, or you're never going to grow. And you're also going to lose out on making money for yourself. From an investor's lens, you want to be looking in the Bronx and Queens right now. Queens has that strong rental demand, and Bronx is early on in that appreciation game. Queens is rising in appreciation, and you want to be able to get in before it gets too late. If you're in Brooklyn and you're planning on buying there, you want to be in that long-term buy and hold mindset. You have to be willing to put quite a bit of money down, and it's not impossible, but of course it's going to be a higher barrier to entry. So expect to pay a lot more out of pocket because there's a lot more people in the market looking there. So that always comes with a lot more bidding wars. Just keeping that in mind. Obviously, if you're looking in Manhattan as an investor, you're going to be looking probably for those condos rather than the co-op. You do not want to buy a co-op if you're planning on using it as an investment property. And I do have another video on that, like I mentioned before. So take a look at that because it's really going to dive into why the reasons investors don't really want to go near co-ops in the city. And if you're relocating here, you don't live here yet, you're probably in a better position than you think. A lot of people who are even considering New York are not scared of this city, which is the greatest city in the world, as I always say. But you are in the position to see this with fresh eyes, and you're not thinking, well, I have to be in a certain neighborhood. If you have your mind set on Manhattan, it might be worth taking a look and coming here and maybe spending some time in a short-term rental before you make those decisions. I strongly encourage that everyone move here in that type of situation prior to buying something, because it is very hard to find something here sight unseen unless you're in that investor's lens and it's not something that you're going to feel emotionally attached to and planning on staying in for years to come. So if any of this resonated with you today, or you have a neighborhood that caught your attention, or you've been on the fence thinking about buying here, moving here, you name it, you want it, you got it. I am your girl. It's your listings. I can be found on all platforms. DM me on Insta, hit me up, shoot me a text. I have my phone number in the description. You can leave a comment with any questions you might have from today. I'd love to be your real estate bestie here in the greatest city in the world. See you next time.